First of all, a welcome to everybody. This is the next in the line of the FinTech with Fi911 podcasts. I do like the term Fintalk. Actually, it's Fintalk. I'll start that again. Welcome, this is Fintalk with Fi911. Welcome, everybody. Fintalk is a series of podcasts, live podcasts with industry experts talking about different subjects each month. Today's subject is consumer protection and how it impacts consumers, merchants, and financial institutions. So I'm really excited to get involved in this discussion. You won't be listening to just my dulcet tones. I am joined today by two experts in this field. First, we have Becky Clements, who's the Director of Payments at UK Finance. And we also have Craig McClure, who is Director of Relationship Management at Fi911. Now, this is your great opportunity now to introduce yourselves. So, Becky, if we could just start with you, if you could just give us a little bit of background about yourself, where you've been in the industry, and how long you've been in your current role and what it involves, that would be great.
So I'm currently Director of Payments at UK Finance. I've been there for nearly 3 years. UK Finance is a trade association, and I run the payment stream of it, which includes acquirers and cards, as well as interbank payments and European payments. Before that, I did 4.5 years at Metro Bank, running their payment operations and their industry engagement. And before that, I spent a very long time at NatWest. But I've always worked in payments since I left school.
That's great. So you've got a deep understanding of the issuing side as well as the acquiring side of the industry, have you?
I'm probably more on the acquiring side than the issuing side.
Okay, I'll be looking forward for your views in a moment. And Craig, could you give us a little bit of background on yourself, please?
Sure. Hi, Steve. So I currently work for Fi911, as you said, where I'm a Director of Relationship Management, so look after our sort of larger financial institution clients. That's kind of what I do day to day. I've been here for about 3 years. Before that, I was working at Visa for 3 years, working with some large UK banks, issuing and acquiring work. And then before that, I spent about 14 years in a couple of the UK banks. I started working when I was still at school at Bank of Scotland, doing credit card applications on paper and scoring them with a red pen and all that stuff. And then just kind of stayed and worked in various kind of customer facing roles, and then moved on to do some industry relations and then fraud and debit cards and acquiring. So I've got a good old background, but always kind of working in payment space.
That's great. And Craig, that's exactly why you've been invited to this podcast, because you've got that experience. I can't believe you've been in payments that long, Craig, and neither can I believe you're actually at school, but that's quite impressive.
I still look like I could be at school, don't I, Steve? That's the thing.
And can I just ask you, did you have to throw out a young man called Harry Potter from that room you're in at the moment, or is that really a room in your house?
So we've just moved house in the last month, and I found this storage cupboard, which is actually like large enough for a desk. It's a great place for me to live and close the door on at the end of the day. Which, but it is a bit of a cupboard, come sauna, come Harry Potter. Yeah.
Right. Okay. Perfect. So let's get into the subject then. And I do think this is great timing for this discussion, because it was only last week I was looking at the TV in the UK, and a Visa TV ad came up. And it was focused purely on consumer protection, or as they called it, zero liability, which I find fascinating. Gone are the days when they used to talk about interest rates, ubiquity, global acceptance, and perhaps reward schemes. And I know a lot of that is curtailed at the moment with COVID. But they were majoring through a TV advertising campaign that costs a lot of money on consumer protection. So I think this discussion is perfect. My view is that we're taking consumer protection for granted. And it isn't that long ago, I mean, cards came into the market in the mid-50s, where people paid by cash. Before that, it was barter, sometimes check. And really, the main foundations and principles of payment were really around buyer beware. So if a buyer had a problem with the purchase, they'd go back to the merchant, or perhaps they'd go to court. But that would be it. then card payments started, and we started getting dispute management. I'd like your view on why you think card schemes introduced dispute management for cardholders within cards.
I promised Becky I'd do the question, didn't I? So I'll pitch an answer. I mean, you talk about cash and checks, Steve. Those are kind of irrevocable. So once you've handed over the cash or the check, you can't get it back. So when you hand over a payment card with an acceptance brand on it, you're kind of entering into a bit of a leap of faith that the payment will work and that there's some guarantee around that. And one of those guarantees is that something goes wrong, there's a way to fix that. And card payments kind of back in the 50s, early 60s, started to be about paying for hotels, travel, in that kind of space. And there always was a need to fix stuff like, hey, my hotel, I didn't get the upgrade, or I got, I damaged the rental car, or those kind of those sorts of disputes. And just over time, we've just added more and more protections on as cards have grown into different acceptance areas. I mean, now we're in, cards are everywhere and have been more important than ever in the last year. And because protections have just grown along with that over the years, I think.
So Craig, do you think it was something to do with a new payment market coming into existence, and people need to find ways to get the payment accepted by cardholders, give them a bit more trust and belief in it, trust and belief that they already have in cash and checks, etc. at the time?
I think it was for everybody involved. I mean, the customer gets the knowledge that he can make the payment and he's going to get the goods that he's or the services that he's paying for, and there's a guarantee that no one can fleece him at the other end of that by not giving him them, or giving him a substandard service, or indeed not even existing when he goes to get the service. And then for the retailer, his end of the bargain is he gets access to the consumer being able to spend money without having to go to the bank and get the cash. I mean, which 50 years ago, even 10 years ago, even today is a valuable commodity for any retailer. Yeah,
agreed. Just considering that then, so considering the introduction of card payments into global acceptance, what do you think the impact has been on financial institutions, consumers, and indeed merchants, with card payments coming in and replacing payment methods like cash and checks?
So I mean, it's a kind of long story, isn't it? But I mean, the story is a massive one. I mean, the impact is in administering the security and the protections. And a lot of it is about that, because if you go to the bank and you, on a Friday after you've been paid, and you draw out your X amount of money and you shove it in your pocket and you spend it during the week, it's kind of at your risk. Once you've got that money, it's at your risk. Once you're making payments using the bank's facilities, there's an element of shared endeavor in that. So the bank has a role to play in protecting you from loss, from fraud, from people being able to steal that money. And then, as we just touched on, there's a growing, or there has been a role for the bank or the payment institution in protecting you after you've made the purchase.
And it's the global. It's you were traveling. You'd have to, if I went from the UK to France, I'd have to change my money up. If I went to France to the US, I'd have to change my money up again. If I've got a card in my pocket, I can pay as a consumer at most outlets.
Ubiquity, absolutely, Becky, totally agree.
Yeah. So if we think about the impact it has on merchants, for instance, so a merchant is there to sell their goods and services, and hey presto, disputes come along. What's been the impact on merchants over the years of the dispute process itself and the growth in disputes?
I think that as card payments have become everywhere, as Becky just said, I mean, that there are obviously spaces for people to misbehave in that. So if there are, merchants or retailers, wherever they are in the world, who are not living up to their end of the bargain in taking a payment, then that's why the dispute process exists, to make sure that there is a resolution of whatever that problem is. And it's a fair resolution. It was always designed to ensure that the outcome is just. But as with most things, there is creep for mistakes, there is creep for sort of bad behaviour, and we've seen that almost an entire industry has grown out of managing these processes. So for retailers, they have to understand if they're entering into taking card payments, then they're always going to see these disputes, and they have to be ready to be able to answer them, so that they can defend themselves if they think it's unjust, or they have to be ready to understand that there's a financial loss coming if they've done the wrong thing themselves.
Craig, do you think that merchants are aware of this?
I think they are when it happens to them. I'm not so sure that up front most walk into this thinking, I need to really think about how I manage the risk of a dispute or a chargeback coming potentially sometime after. I mean, in my experience, we found I've found that merchants, once they've been burned, for want of a better word, once they've been burned by chargebacks, they tend to take their role in the whole process of doing the right things in card payments quite seriously.
And with COVID, more people are using cards because more people are buying things online. So I think some merchants have really woken up and smelt the coffee when it's come to disputes and chargebacks.
No, sure, I understand. We'll come on to COVID in a couple of minutes, if that's all right. But just in terms of, if we think about the players in the payments ecosystem, and I'll keep it simple, if we think about the issuers, the merchants, and the acquirers, and we can include gateways in this. Do you think that each part of the payments ecosystem is well positioned for dispute management? For instance, are acquirers well positioned to support their merchants with any queries? Are issuers able to support all their cardholders with all their queries? Is the payments ecosystem able to scale when it comes to disputes? What are your thoughts on that?
So, in my opinion, and my opinion only, Steve, card payments, in terms of the front end of it, so that the kind of sexy end of paying for things, has evolved at breakneck speed in the last 10 years in particular. Okay. We've gone from Magstripe or Clunk, Zip Zap type paper-based transactions. We've moved to contactless. We're using mobile phones. We're using all sorts of tech to make payments. The bit at the back of the office where we do disputes and chargebacks hasn't really moved as fast as that. So it's still very difficult, complicated, time-consuming, paper-based, and as a result of that, it has meant that most of the players, whether they are the issue acquirer, gateway, or indeed the end merchant, or indeed the consumer understanding what his rights are, it's not quite as digital and as super as the front end experience, I would say. It's my opinion. I mean, Becky, I don't know what you think.
No, I agree with you. I think paying for stuff has come so much easier in the last 10 years, especially, the contact limit gone up to 45. I think it'll probably go up to 100, tap go. But still in the back end, if you have to do a chargeback as a consumer, I did one with a hotel took an extra night off my credit card, and I had to do a chargeback, and it took me probably about 4 weeks to get it resolved, which is not a good consumer experience.
Becky, just picking up on that point then, as a consumer experience, why isn't 4 weeks good enough? What is the expectation of cardholders when it comes to resolving a dispute?
I suppose because it's so instant when you buy something, you think that getting the money back will be as instant as it was paying for it, and it's not.
Okay. And in that process, I mean, you've been part of the payments world for a long time, but in that process, did you consider the side of the merchant on this? Or was it clear to you that everything you were saying was accurate, correct, and therefore you should quite rightly get your money back?
I had to prove that I hadn't stayed the extra night in the hotel, and the hotel was in Toronto, so I had problems getting through to them. That's why I went to the card issuer. Okay,
yeah, that's interesting.
Steve, I think to your point though, what's missing in that expectation of now immediately I want it is that oftentimes the consumer uses that route as a way to get the gratification of the instant refund or the kind of straight through resolution. But at the back of it, there is a business there who's maybe saying, hang on, I had terms and conditions with you that said this, and you've broken that agreement, or actually you did stay the extra night, or just because you checked out at 3 a.m. doesn't mean you didn't stay, or whatever their story is. And the right of reply is the bit that takes a bit of time. So instant doesn't always work with the resolution of disputes or chargebacks.
Yeah. Well, I guess we've got different sides of the coin here, haven't we? We've got the cardholder like Becky thinking the resolution should be instant. She wants her money. She wants to go spending it again. You've got the poor old merchant at the other end thinking, well, what have I done wrong? I've already banked the money. I'm trying to use it in my business. And the two elements of this are poles apart in terms of their expectations. I'm conscious that card schemes introduce dispute management, but also over the years, various governments around the world have added legislation to sort of sit on top of what already exists from the schemes. And I'm just wondering, has it gone too far? Is there too much legislation now around disputes and settling consumer queries to the detriment of the financial institutions and the merchants? And again, I'm just picking up on Becky's experience there, that immediacy puts an enormous amount of pressure on the whole ecosystem. What are your thoughts on that? Because my sense is that governments and legislation around the world kind of use consumer legislation as a bit of a vote winner, we're doing the right for you, Mr. Consumer, but don't necessarily think about other parts of the payment system. What are your thoughts on this? Do you think it's gone too far? Do you think it's nicely balanced? What are your thoughts?
Hard one. Because I always like to think from the consumer side of it rather than from the acquirer or the merchant or even the bank. Because I don't think in other parts of the payments ecosystem they do think about the consumer, whereas I think in the cards world they do. So I think it's good. Probably if I was a bank or an issuer, I might not. But as a consumer, I like that protection.
Okay.
It is a hard question. I mean, I was working in.
That's why I'm here, Craig.
I know you're all about the hard questions. You're like Paxman or something. I was working for one of the high street banks when we did PSD, Payment Service Directive 1, so sort of back in 2008, 2009, and that introduced the concept of an immediate refund if the customer said, I did not authorize this transaction. And that placed an enormous burden on the banks because we'd never done that before. We'd always say, well, we'll have a think about it, and we'll get back to you and we'll see if we can recover it in a chargeback before we decide whether you're liable. And that switched the equation to say, actually, the customer always gets his money unless you can, unless basically you can prove that you were there and it was you, which is very difficult to do. So things like, even there are examples of customers having entered the PIN, but they say it wasn't them, and then it's about how did it get disclosed, and so it becomes very customer weighted to on their side. But I think though that, and you talked about the Visa zero liability guarantees and things like that kind of layer on top of these existing legislative guarantees, give customers an assurance of trust that when they're making electronic payments, it's going to work and it's going to be nothing bad can happen. I mean, and that can only be a good thing. I mean, there are other examples of regulations like distance selling that exist in various forms across Europe, and then in the UK we've got Section 75 Consumer Credit Act, which dates back to the 70s, but basically makes the bank sort of jointly liable when you make certain transactions, which places that kind of burden of shared risk when making large transactions, and that's a good protection for consumers, and it works. But I think to Becky's point, if I were a bank, I might be thinking sometimes it's gone too far, because banks definitely end up with losses that they wouldn't like to take because they're sort of forced to. Yeah.
Okay, understood. So it leads nicely to my next question, my next thought. Is it working? So is the consumer protection that is now in existence, is it working? Does it work for all parties? What are your thoughts on that?
Well, I mean, I haven't seen any evidence of the usual suspects in terms of the consumer champions shouting that it's not working. I mean, there are always noises, and those tend to be around I mean, I know, Becky, you do a lot of work with, or UK Finance does a lot of work in financial crime with scams and faster payment, especially sort of payments initiated in that way, and the bank's responsibility in that area. And there's a lot of debate, but I think for mainstream kind of consumer protection in terms of just paying for everyday things, it broadly works.
I mean, consumers do abuse chargebacks as well. I run a chargeback team in a bank, and it was a guy said he hadn't been in the bookies, and his card, he hadn't made that bet. But luckily, the bookie had a camera on him the whole time, and we could prove that he had been in the bookies. But he was trying his luck.
Yeah. And just picking that up, that must put an enormous burden on the issuer, and then indeed the acquirer and the merchant too, because at a certain stage they're almost guilty before being proven innocent. So your sense is that from a consumer point of view, this is working. But I think on the other side of the coin here, we've got to accept that for the issuer and the acquirer, and indeed the merchant, there's an enormous amount of work and effort and resource tied up in chargeback management. And certainly for a lot of merchants, I think, a lot of merchants will see this as too much, and therefore they treat chargebacks as a cost of doing business rather than trying to defend their business, because it's not really what they focus on. Just to bring this kind of right up to date, if we think about COVID, and Becky, you touched upon this, when we think about COVID and the impact globally, particularly in travel and entertainment, I think it's fair to say, what's your view on how the consumer protection has held up? And I'm not just talking here about the merchants, about the cardholders. I'm also thinking about the whole ecosystem. So if we think about the merchant impact and the acquirer impact and the issuer impact as well, how do you think the whole system has held up and coped and managed with this?
I think it's done better than I would have expected. I mean, I would never expected a pandemic in my lifetime, but the way, the holidays all stopped, wedding venues were shut, gigs and open air things were all shut down. I think it held up particularly well. But Craig, you might have a different view on that.
I think COVID tested chargebacks like they never have been. And exposed them and made them visible, and more people know about them than they never did. And that probably highlights, if nothing else, the importance of it. Because probably one of the biggest examples was airlines taking 16 weeks to get to your email about a refund. You've got a chargeback right. People got to know that, and they were exercising that chargeback right to get their money back. But so without it, customers were completely at the will of an airline going, well, it's going to take me 3 months because I've got nobody in the office and I've got 15,000 queries. So the system did work. Could it be improved? I think there's tons of lessons to learn out of the back of COVID for how we can improve it. But I mean, we sit in that industry, and it's only fair to say that for the vast majority of people, it did work last year, and it showed that. Were there mistakes? Yes. Did people get double refunded? Did people make profits out of making refunds, charges, vouchers, and getting refunds from other places? Yes. Did a lot of businesses lose money where they didn't have? Probably, and that will all come out in the wash. But I think if there had not been a chargeback system, we'd be facing a much more bleak situation in terms of how people got made good for stuff that got cancelled last year.
Good points. And from your experience of both of you, from what you've heard in the payments world around how COVID went, have you become aware of any improvements that you think could be made in the process? If we were to face another similar situation, I don't even want to think about one, but if we were to face a similar situation, are there things, are there processes, are there procedures that should or can be put in place that would help the consumer and help the merchant and help the schemes in such an environment again? Or do you think it's a matter of falling back on the established processes that we have in the expectation that they will be good enough?
I think, Craig, whenever we've had sort of a disaster, an airline go bust, even before COVID, we've always gone back and looked at lessons learned and how could we simplifying those procedures, and that will be constant. I think we will continue to do that, as we come out of this pandemic.
I agree. I mean, I think, as you say, like whenever we've had, thinking back into the past of large airline groups or travel agencies or groups that have collapsed and there's a lot of money at stake, everyone always does learn lessons from those. I think here, what became very evident to me last year is that consumers panic quite quickly because nobody was talking to them about what was going to happen. So they didn't know when the airline was going to get back to them. They didn't know what their rights were because it wasn't clear between consumer law if you paid with a credit card versus a debit card, or you paid with in cash in the travel agency, whatever the method was. Just a bit of a lack of clarity. And I think a bit of a relook at how customers understand their rights, what those rights are, how they differ between different payment methods is something that will become more important. And then if there is another, God forbid, another kind of mass event where we can't do anything for a year, then lining up on what people can expect, I think will be easier to prevent consumers having to panic in the way they did. And I was one of them. I was going, I've got a lot of money in the game here. I need to make sure I get it back and I don't lose it. And no one's talking to me.
Good point. So take this one step further now and think about the growth in payments. It doesn't just start at credit cards and debit cards. I'm thinking now of products like buy now, pay later, or crypto payments, or bank payments, open banking, that sort of thing, Becky. Do you think dispute processes are needed with all of these payment methods to assist with consumer adoption?
I think if a consumer uses a faster payment to buy goods or services, they need protection. But if a consumer uses a faster payment, say me to pay Craig for my lunch, a £5, I don't think they do. So I think we need to look at the different class payments for these bank-to-bank, interbank payments, and as an industry work out how do we keep the people protected when they're buying goods and services, but not penalise people who are using those rails just to pay a friend.
Okay, so different levels of protection depending on the value.
On the value and the purpose.
Well, that's an interesting step. I mean, at the moment, people don't need to worry about that with card payments. So we're introducing a level of complexity there. Do you think consumers will accept that?
I think we have to, as an industry, make it very simple for consumers to understand. We shouldn't complicate it too much.
And do you think the legislators will understand that? Will they see a difference between a £10 transaction and a £1,000 transaction?
Who knows? We're still sort of working through that, but I don't think open banking payments will really take off until there is some consumer protection there. Why would I want to use a TPP when I could use my credit card or my debit card?
What's a TPP?
Third-party payment provider, sorry.
Thank you. And Craig, what are your thoughts on this?
I agree. I think consumers would find it very hard to accept that if they paid a retailer, perhaps because the retailer had preferred to be paid that way, that they didn't get the same protection that they would have had if they'd done it using a card. I think that's a reasonable expectation. And I think this is all about expectation. Consumers expect this from the financial services industry. If it's not there, questions would be asked. And in fact, it would be a scandal if there was a sort of bleeding heart stories of consumers missing out because unscrupulous retailers got away with taking their money and didn't deliver the goods or provide the services. So, but I think to Becky's point, that faster payments is kind of democratized. Anyone can use it, really. So it's about understanding there's a category of payments where you're paying for goods and services, and then there's a category of payments where you're paying, your mum for your share of whatever, or Becky for the lunch. And it's getting into the differences between the two, and then it just becomes more complicated when you say, right, now we need rules then for this.
Yeah.
What are the rules of engagement between the person you're paying and the person who pays? And then, the reason that Visa and MasterCard work the way they do is because there's an exchange of money between the parties to make all that happen. So faster payments is largely free to the participants. So that's something as well that the kind of economics of how all this protection works needs to be baked into it, I suppose.
Yeah. Okay. That's interesting. So do you think Do you think consumer protection should be factored into new payment methods right at the start? Because we're talking about payment methods now that are in existence, but they don't carry any protection. Do you think they should going forward?
Yeah, I think with faster payments 13 years ago, when the concept was out there, it wasn't for buying goods and services. It was for paying your mum. It was for it could be I'm paying my lunch and things like that, but it wasn't for goods and services. But that's evolved over the years. So when they started, they didn't think about consumer protection because I don't think it was needed. I think that's only really come to light in the last, 3 to 5 years.
Yeah, exactly. It was never for person to person. It was always for person to person, not person to business. Because before it was person to person was 3 days and backs, which is not really great for a customer. But I think any new mechanism of payment that doesn't have how are consumers protected in mind at the start is not doomed, but is almost destined to have that retrofitted, either because the regulator gets involved or because they then have to later, because the volume demands that they do. So thinking about it up front and making that work on your own terms is I would say is important.
Yeah, and I guess also when you think about credit cards, one of the mantras from credit cards, or any consumer expert would say, put it on your credit card. Pay for your holiday on your credit card, you've got protection.
And nobody really knows why, though. I love that, because you see the consumers, but why though? Well, I just have the ethereal sense that there's a protection that I've never needed to know about or never needed to use, but it's there and it exists.
Yeah, and I guess every other payment method needs to raise the game and
develop an aura of protection.
Yeah, which is an interesting one. So do you think, just again thinking about the payments ecosystem and new entrants into the system, and there are there's many more acquirers than certainly when I first joined the ecosystem, many more gateways and such, like many more issuers. Do you think consumer protection is a barrier for entry to any of these models? A lot of the new players don't have big back office staff. They're relatively lean. But when it comes to dispute management, this takes resource. So do you think there's a way in which financial institutions can handle this requirement to have a dispute process capability in-house, which doesn't involve them in recruiting rafts of people and having the associated costs? What are your thoughts on that?
For me, I mean, from where we sit in Fi911, Steve, I guess we've seen some really great examples of new entrants to the market, playing with traditional technology and new technology, who've thought about how they're going to do consumer protection as part of the initial offer, have done well out of that. Those who've come to it later going, we didn't think of that, or it's become more of a pressing issue because it's a demand on them, have struggled with it. I don't think it's reinventing the wheel, but I think there are places in the market to go to get the expertise. So you don't need to sort of recruit thousands of people, but I think it's something that should be thought about at the beginning of any journey into payments, or you will come a bit of a cropper out as a result of it.
I agree with you, Scott. I agree with you, Craig.
What did you call me there?
Would you, Scott?
Anything.
Edit that out.
I think I was more surprised at being agreed with, frankly, Steve.
Look, that's been great. Do you have any other points to add in terms of consumer protection, where you think it's going, what the other challenges are that are coming up for payment methods? Anything else to add in our discussion?
I suppose from Interbank perspective, the new payments architecture for the retail payments, which are backs and faster payments, they really need to think about consumer protections for that, because there's no point in having a new bit of architect that doesn't have consumer protections built into it.
Yeah, and I saw in the European Commission's retail payment strategy last year, they specifically talked about a need to improve trust in instant payments, but almost with a bit of a question mark about how that would be achieved. So I think it's the same agenda internationally, and probably this won't hit a tipping point of becoming mainstream for consumers to pay for things until there is some kind of a I know I'm protected, that aura that goes with cards exists in this as well, I think.
That's great. I'd like to thank you both for joining. And thank you for your input today. Much appreciated.
Thank you for your facilitation.
Thank you.
Thanks, Steve.
Thanks, bye.